So basically the financial system consists of financial institutions, financial services, financial markets and financial instruments. Important constituents of financial markets which can be classified into two broad categories which consist of money market instruments and capital market instruments. Analyze the ratings given by any credit rating agency like CRISIL that we discussed for at least 5 companies. So you can choose any 5 companies. Hello everyone, I am Niklavati S, Faculty of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. I welcome you all for the introductory session on the subject Financial Markets and Services. So here, this subject is a prescribed syllabus for 4th semester BBA students under the Mysuru University. In this session, I'll be providing you an overview of the subject Financial Markets and Services, and we will be discussing what we are going to discuss in this whole semester and the topics covered under. So in this subject, the agenda of today's session consists of syllabus and learning outcome, modules that are covered under this subject as well as the internal exam pattern and the final exam pattern. Moving forward, this subject consists of 5 modules. This whole course is designed to give you a comprehensive understanding of how the market or the financial markets are functioning, and it gives you the whole complete view of the financial system in the Indian context and what are the constituents of financial system. This helps us to understand the financial world and how it is operating, right from the financial institutions that serve as the backbone in bringing up or making to happen trillions or billions of dollars transactions that are happening around the world. So under this course, there are 5 units. Unit 1 is about the overview of financial system. The Unit 2 is about financial institutions. Unit 3 dwells regarding the financial services, and Unit 4, it consists of financial markets and instruments, and Unit 5 is about stock markets. So we will be exploring the intricate network of the financial markets, financial institutions, services and the instruments, as well as we will discuss what is stock market is all about. All these constituents of financial information helps us to fund the economy and fund the finance to the businesses and various corporations. Think of the circulatory system of the business organizations and the business finance, where it channelizes the funds from the savers or the investors towards the productive activities or those who are the issuers of the shares or those who are in need or the owners of the business who are in need of the funds for running of the business. It consists of making use of the investments for productive activities. So moving on, after the end of this course, the students will have a comprehensive understanding and will be able to understand what is the financial system is all about, and they will be able to define what is the financial system, how it operates and what are the institutions, financial markets and services. So here they will be able to define what are the constituents of the financial system. It's nothing but it includes the financial markets, services, institutions and also other financial instruments. And the students will be able to analyze the concepts relevant to Indian financial market and relevance. So here, once they get a comprehensive understanding of the financial system, here we will be studying more about the financial system in Indian context and why there should be a proper financial market and its regulation and system, its relevance to an economy. And not only that, the students will be able to understand the concept of financial services, types and functions. So here the financial services are nothing but the services that are provided by the financial institutions. Say for example, it might be merchant banking services, or it may help the companies to go for issuance of IPO, etc. And the students will also be able to understand the different types of financial instruments that may be consist of short-term and long-term financial instruments that can be issued either in money market or the capital market. The students will be able to identify and classify what are the different types of financial instruments, and also it helps them to demonstrate an understanding the functioning of stock markets. So they'll be able to understand what is stock market is all about. So how it is regulated, what are the stock exchanges that we have, and who is the regulatory authority for stock markets, and how the indices or the indexes of the stock markets or like Sensex or Nifty happens, etc. The students will be able to understand the functions as well as the purpose of stock markets. Moving forward, we have in Unit 1, it's all about the overview of financial system. So here, this chapter lays a foundation for getting the knowledge regarding what is a financial system is all about, and what is the financial system of India, and not only that, what are the constituents of financial system. So basically the financial system consists of financial institutions, financial services, financial markets and financial instruments. So here basically the financial institutions refers to the banks and other institutions which lend the money and or which are accepting the investments or the deposits from the public. They help in channelizing and connecting the investors versus the needy people. Here the needy peoples are nothing but the issuers or the borrowers, etc. Say for example, if we take the example of a bank, they accept the deposits from the savers or the investors and they lend loan to the borrowers. So in this way, they help to channelize the money from those who have towards the productive investments or the productive activities. Then the financial services are the various services that are provided by the financial institutions to the individuals or the investors or the business corporations in helping them to for their investment management, providing insurance, providing loans or in terms of lending, etc. For example, it might be merchant banking, lending or mutual funds or investment or insurance, etc. Then the financial markets are the platforms where the buyers and the sellers trade the financial instruments. And here we can classify this financial markets into money markets and the capital markets. Usually the money market consists of the short-term loans or the short-term financial instruments which has the maturity within 1 year. And the capital market instruments have a long term, that means more than 1 year of maturity for the financial instruments. Then financial instruments are the tools of the trade. For example, it might be stock markets or bonds, derivatives, etc. Moving forward, Module 2 consists of financial institutions. So here we will dwell in deeper into what are the financial institutions like banks or investment companies or insurance companies, etc. And not only that, we will be discussing about the features or the characteristics of financial institutions, and here we can classify the financial institutions into two broad categories such as money market institutions and capital market institutions, where the money market institutions deal with the short-term debt instruments. You can think of the commercial banks and also money market mutual funds. Capital market institutions consist of or they deal with the long-term debt instruments and as well as the equity, which consist of the stock exchanges and the equity and the trading that happens Capital market institutions deal with the long-term debt and equity instruments where, for example, investment banks as well as the stock exchanges. We will also examine and discuss about some of the specific institutions. Say for example, and we'll be in detail, we'll be discussing the objectives and functions of those institutions, which includes like IFCI, that is Industrial Finance Corporation of India, and IDBI or Industrial Development Bank of India, State Financial Corporations, Industrial Credit and Investment Corporation of India, and also some other institutions including the Exim Bank of India, National Small Industrial Development Corporations, National Industrial Development Corporations, and RBI measures for NBFCs. So, we'll not only discussing about some of the important financial institutions at the national and international level, their objectives and functions in order to keep the financial system in a very active condition and which has a positive impact on the overall economy of a country. And not only that, we will be also discussing what are the measures that are taken by the RBI, that is Reserve Bank of India, which is the central bank of India, in order for NBFCs. Moving on to the module 3, it consists of the financial services. And here we will be understanding what is financial services, its meaning, and these are nothing but the services provided by the financial institutions for the individuals or borrowers or the group or the organizations. So, we will be studying its objectives, functions and characteristics, and not only that, the various types of financial services that are provided by the financial institutions, which includes merchant banking. So, basically the merchant banking involves, advising the companies to raise their capital through the issuance of stocks. For example, a merchant bank may help the company to go public through the issuance of IPO, that is initial public offering. Then it also consists of leasing. This is a form of renting an asset rather than buying. Then it involves the mutual funds. So, it's a tool which attracts or which pulls the money from the individuals or multiple number of individuals or the organizations and invest in multiple portfolios. Then venture capital is the funding that is provided to the early or high growth companies, or it is also provided to many startups at the early stages, and it consists of the credit rating. So, credit rating is an assessment of the credit worthiness of a borrower. So, institutions like CRISIL and ICRA are going to rate the companies or the borrowers based on their credit worthiness. Moving forward, in the unit 4, it's all about the financial markets and instruments. So, this part of the syllabus consists all about the financial markets and what are the types of markets and also the instruments that are traded in the markets, the regulatory authority of these markets. So, basically in this chapter we will be discussing what are the financial markets are all about and what is the importance of those financial markets for any country and what are the functions and the role that they play in building an economy or in channelizing the buying and selling of the financial instruments. Financial markets are the platforms or they facilitate the buying and selling of the financial instruments. They bring together those who have surplus fund, for example investors, and those who need fund, they are borrowers. And also there are two important constituents of financial markets which can be classified into two broad categories, which consist of money market instruments and capital market instruments. So, in money market instruments, it consists of all kinds of instruments or the debt funds which have the maturity within 1 year. Whereas in capital market instruments, it consists of those securities and financial instruments which has the maturity more than 1 year. Financial markets are not necessarily the physical places like other markets. There can be, a network or the over the counter transactions. And also, we'll be also discussing about the SEBI, that is Securities Exchange Board of India, and its guidelines for the listing of shares and issuance of commercial papers in these money market and capital markets. Basically, the financial markets helps for the mobilization of funds from the investors to the borrowers, as well as it helps them in risk sharing, and also it brings liquidity in the stock market, as there is a easy mechanism for the buyers and seller to buy and sell the instruments very easily. And not only that, money market instruments consist of, for example, treasury bills. These are the short-term debt securities issued by the government. It may also consist of the commercial papers, etc. Whereas capital market instrument consist of equity, bonds, debentures, etc. Moving on to the unit 5, that is stock markets. So here we'll be studying and we'll be understanding what is a stock is all about, its nature and functions of stock exchanges. And in India we have two stock exchanges, that is major stock exchanges we have is BSE and NSE. This is nothing but Bombay Stock Exchange and National Stock Exchange, and also OTCI, that means over the counter exchange of India for the commodities market. And not only that, we'll be learning about how the stock market operates in terms of trading, like the process of trading, settlement and the custody, and we will have a brief discussions even on NSDL and CSDL. NSDL means National Securities Depository Limited, and CSDL means Central Securities Depository Services. These are the 5 chapters that you have in this subject. Moving forward, skill development activities. So in the skill development activities, you are required to visit any financial institution and prepare a report regarding its structure, functions and performance. It may be a commercial bank or an insurance or an investment company. And here you need to analyze the ratings given by any credit rating agency like CRISIL that we discussed for at least 5 companies. So you can choose any 5 companies and you can just analyze what are the credit ratings that are given by the credit rating agencies, and you are asked to collect information on Nasdaq, Nifty, Sensex, and these are all nothing but the stock market indices, and you need to write a brief report on these. And you are asked to identify a company of your choice and record its share prices for 1 month, where you are required to choose any one company, say for example Infosys. So you are required to record the share prices of daily share prices for 1 month, so that it helps you to observe what is the price that is changing for a share or a stock in a stock exchange for a period of a month, like how the price fluctuates or volatile. So what is the volatility of that particular price? Then moving forward, the marks details. The total allotment of marks for this subject is 100 marks, out of which 40 marks is from your internals, that is 20 marks from continuous and comprehensive evaluation and 20 marks from the internal assessment tests, and the semester end examination is for 60 marks. So out of the 60, you need to score minimum of 21 marks, which is a 35% of the marks in this semester, and for 100 you need to score minimum of 40 marks in order to pass in this examination. Moving forward, this is the internal pattern for your subject in this semester. Internal pattern is for 30 marks. The internal test 1 will be from unit 1 and unit 2. The internal test 2 is from unit 3, unit 4 and unit 5, and the final marks will be awarded on average of 2 internals. Moving forward, so this is the pattern of the examination. The examination is for the 60 marks, and it consists of 3 parts, Part A, Part B and Part C. Part A is for 10 marks, Part B for 20 marks and Part 3 for 30 marks. These are the books for reference. It includes L.M. Boley's Financial Institutions and Markets from McGraw-Hill Publications and Khan M. Weiss on Indian Financial System from McGraw-Hill Publications, Sharma Meera on Management of Financial Institutions from Eastern Economy Edition Publication, and Boley and Mahakut's Financial Institution and Markets, Structure, Growth and Innovations from McGraw-Hill Publications. So this was all regarding the introduction session on the subject Financial Markets and Services. After the end of this course, you will have a solid understanding on the financial system and its operations, process and the stock markets. So hope you have understood. Thank you.